How's the market that you look at today?
Today, the market's behaving nicely. I think we have lots of information that we can totally talk about to have a better perspective.
Yeah, we have plenty of time in this interview. Well, right now, the earnings season is on spotlight on Wall Street. So from your point of view, can these earnings seasons improve enough to support the stock market's valuations?
There's great speculation on what's happening, and we have to understand a number of points. I think the first one would be that the energy was performing really badly in commodities in terms of the sector in the Q1. Then the sweet spot of the New York MEX crude oil at $50 per barrel was pretty great. Brent continues to outperform the WTI. Then we have cracked the spreads that have moved higher in terms of good news for refiners, and natural gas, of course, declines, but still over $3 per MMBTUs. In general, the energy sector came back down to earth after the explosive 2016.
Yeah, the opinion goes that the energy sector is going to be to lead the second quarter gains, mostly because it is recovering from the very low base. So from your point of view, just you said that you hold the same expectations considering the oil industry's situation right now.
That's a tricky one. So in Q1, we saw that the sector declined by 5%, right, 5.3, as the prices corrected to the downside. Then often the best performance sector in the commodities market is the one period that becomes the worst in the next. So are we expecting another good one? That is really not so clear just yet, but commodities, the power of the world, very important, so we should carefully follow that. The production cut at the end of November 2016 and the election that we had for an energy-friendly administration in the U.S. did support gains in crude oil, but we need to understand that during the first quarter of 2017, the energy commodity spent most of its time trading in a very narrow range, right, the $50 to $55 range. So production from shale producers in these prices above $50 increased while OPEC production declined. So this is slightly over the period that we saw this behavior, but at the same time, demand has increased as economic growth and optimism in this certainty scenario about the future has been supportive of the market itself.
And also, the tech sectors is expected to be the second strongest, while the others, analysis demonstrate that consider the bubbles in this industry in the near term. So what is your perspectives on this?
Well, this is a very interesting point because the extent of the production cut announced at the end of 2016 as the Saudis have vested interest into this sector, maintaining a stable oil price into 2018. That is good to understand. This is going to be selling at least 5% of Aramco, which has been making the news for a possible IPO and a stable oil price around the $50 per barrel level. That I think is going to enhance the sector itself.
How about the technology, the tech sectors?
Sure.
Do you think there's a bubble in that, or is it going to have the solid profit cash flow there?
This is, well, you know, the tech sector has been used quite a lot, especially in the U.S. in the last few years. And that's going to be one of the main drivers of this economy, I believe, in this sector as well. We should pay attention to that. And I think right now, looking at all the countries that are the top leaders in the OPEC, right? Saudis, Russians, and the U.S., where the U.S. has a very strong take on technologies that are being used, specifically in this sector.